All right, ladies and gentlemen, we're back at it bringing you another tips video. And in this tips video, we are going to talk about trading psychology. And you know what? I could break this video up into how many things do I have? One, two, three, four, five, six, seven, eight, nine. Like nine things to talk about. So I could break this video up into nine different videos and then throw you through a loophole of different, videos. But I thought, you know what? If I want to do a psychology video or just one video talking about psychology, I want to jam everything I can and make it, a 30 to 45-minute video, right? So if you manage to make it through the whole thing, I appreciate it. I strongly recommend you do because we're going to talk about some really interesting points. We're going to cover social media, risk to reward, thinking in percentage, not pips, how to trade like a casino, the importance of back testing, dealing with win streaks, losing streaks, and all that. I asked you guys on Twitter and a couple people from my private group, and I got a list of things that we're going to aim for and answer. Okay, so I say let's just get right into it and let's start talking about social media first. Now, what I'm probably going to do down below, maybe in the description or in the comments, is I'm going to put timestamps to everything. So it's like, hey, you just want to listen to where you talk about risk to reward? Well, then just click on the risk to reward part. Okay. I actually strongly recommend you go through everything because I really only want to talk about the main couple things. There's probably 100 videos or 100 topics I could talk about when it comes to trading psychology. Now, in no way am I a psychologist or anything like that, but just from my experience, trading experience, I think I have at least a little bit of say in how to talk about psychology and um, just give my opinion on it, right? I'm just trying to invoke thought here. That's my main goal here, okay? Hold on, I still have this OBS. Let's click on the chart. There we go. Okay, so the first thing I want to talk to you guys about is social media, all right? Just understand, everything on social media, doesn't matter what business you're in the business of advertisement and entertainment, okay? Here on YouTube, what am I in? Well, I'm in a little bit of both because I do run ads on my YouTube video. I'm also here to entertain you, but I'm also trying to sell people on purchasing a product, right? That's just how every single YouTube video is. You follow a YouTube channel that maybe doesn't sell any products, but they're sending out affiliate links, right? They run advertisements on their YouTube video. Every business out there is basically running between they're there to entertain you and to put advertisements in front of you so you can purchase a product either from them or from somebody that's paying for that advertisement. Okay, so just understand when you're dealing with social media and you're looking at trading posts, what are people typically doing? They're usually just showing their winners. You only see people showing their winners or 99% winners saying, "Hey guys, look at me driving my Lambo. If you want to become like me, just buy my course, buy my signals, and then I will just ship you the trades and you just make money." Right? I think hopefully by now, most people have realized that's typically not how it works. So just understand, especially when you're in this trading industry and you're following, I don't know, Bilbo Baggins Trader 91, and he's trying to sell a product, you don't sell a product by showing your losers. I can personally talk from my experience. If I show my losers, they don't look good. They don't get that much attention. Then if I show my winners, they get a lot more attention, more likes, more posts, more responses. People want to see winners, not losers. So if I want to sell a product, I better show, my best foot forward, and I better only show my winners. So that's why most of the time you're only going to see these winners coming out of people's their trading accounts, their social media, their Facebook, their Twitter, their Instagram, showing you guys how much money you can make. They take screenshots from, I don't know, 6 months ago to a year ago, showing people's client reviews saying, look how much money we just made. So just don't believe in that stuff, right? You're dealing with information overload. And when you start going to a drawdown, you start looking at all these different YouTubers saying, okay, well, this YouTuber tells me how I should be um, managing my risk or my trade management, but then this trader says, well, you should move your stop to break even after 1 to 1, and then one says 2 to 1, and one says 3 to 1, and one says, okay, you should take profit here for this reason, and you got this trader taking profit for this reason, that reason. Then it's like, why would you buy when you're in this area? Why would you sell when you're in that area? It's just you can't all be on the same page. So I just strongly recommend just either get off social media and do not engage in any conversation with anybody. That's including me. I always tell people, like, hey, what's my number one tip? Is to get off social media. I've never been a big social media person growing up. And it's something that hurt me in my trading because I was looking at 5 YouTubers and they all saying basically different things for one subject, right? So I just strongly recommend just creating a set of rules, and we're going to talk about that later. Creating a set of rules and just trading your set of rules only. Just understand most YouTubers, Instagram posts, Twitter posts, they're there to sell you a product, right? Now, yes, they might be scammers, or yes, they might be a good quality product, a good mentor, or whatever. But you have to weave your way through the bad ones to find the good ones. Okay, so just what I want you to understand out of this topic about social media is that people are going to only post their winners. They want to sell you something, and what you're probably going to deal with is information overload on that. If you have any questions about that, feel free to message me. I don't charge people. I hate when people say, "Oh, you got to join the course to to get the good stuff." Like, how stupid is that? Like, come on. People would actually people would tell me that all the time. They say, "Oh, well, they just tell me that they need to buy the product in order to find the Holy Grail." The truth is, you could do it without any mentor or anything like that, but it's a lot easier. If you were to do it by yourself, let's just say maybe it takes a year. Well, maybe if that mentor showed you how to do it in 6 months, would that 6 months extra from when you become profitable to when you were, if you were going by yourself, could you make that money back and you'll still be engaged in that community for the rest of your life, right? So I prefer to go that route than going by yourself. Okay, so that's the first thing I really just want to talk to you guys about is just understand what social media is out there right now and don't get yourself into information overload. Okay, the second thing I want to talk to you guys about is risk to reward. It's kind of like a give and pull effect because if we look trading risk reward, I pulled up some stuff that I want to talk to you guys about on this. If we look at here, what is this? Risk to reward. This person just has a chart saying what you need to basically be break even. And if you want to be a break even trader, what do you need? You need at least 1-to-1, a 50% win loss ratio. Now on social media, what are you going to see? You're going to see people posting up here 98% winners, 91% winners showing 51x return to 10x return. You always see it. You always see this tool, right? Let me show you guys. Um, where's long position? You always see people going like this. Bought here, sold here. And they slap a price tag on it and they say, look, I made 10 racks, right? Don't believe in that stuff. It just looks handy, you know? It looks good. Because what do you see? You see a little bit of red, meaning that's what you're risking, and this is what you're gaining, right? So that's usually what traders on social media post. And especially when you see on like social media is when they buy 10 they do 10 separate orders of like Euro USD or whatever pair, and they buy 10 separate orders at the exact same price, and they all take profit at the exact same price. It's just kind of like wondering, like, why wouldn't you just take 1 or 2 orders instead of taking 10 if you're going to all take them at the exact same time? To me, it just doesn't make sense, right? But visually, for the new people, it looks very appealing, and they see, wow, this guy just made $5,000, 500, 500, 500, 500, 500, 500. To them, it looks really good, and they join, they buy the signals, they run it for 2 months, and they quit. But by the time that you quit, they've already gotten 10 times the amount of people during that time to just to take your spot. Okay, so when it comes to trading risk to reward, you often hear people say, okay, you want to have 2-to-1 or 3-to-1 or 4-to-1. I completely agree. I think your rewards should be greater than your risk. Now, what I get upset about is when people don't say, okay, well, what's the percentages? Understand, if you're going to go from 1-to-1, you usually need at least a 60% win-loss ratio because you're going to be dealing with spreads and commissions, right? So typically, I would recommend if you're going to go 1-to-1, you need at least 60% to at least break even. That's what I would say. Now, if you're going to start going for 2-to-1 or 3-to-1, understand that if you start asking more from the market, meaning you don't want 1-to-1, you now want 2-to-1 or 3-to-1, what are you doing? You're asking more from the market. The market might pull back and stop you out at break even, or it might stop you out for a full loss, right? So understand. So maybe let's say if you're a 1-to-1 trader, you like to get in and out at 1-to-1, and you're trading at a 70% win-loss ratio, that's very good. 70% of the trades that you take, you're winning 1-to-1. I'll take that all day. A casino will take that all day. We're going to talk about being trading like a casino soon, but understand a casino really only has 51% odds to what, 65% odds. And what are they doing? They're typically winning 1-to-1 every single time. And they're making hundreds of $1 million a year, right? What's nice about trading is, actually, we're going to talk about this later, is you can place your money, you can bet on the market after you see your hands. You can't go to a casino and place, $20 on a blackjack hand without first betting $20. In trading, you can wait for those, like, that 21 or 20 to show up and then place your money, because you can wait for the market to show you what you want to see. You can't just go sit down at a blackjack table and say, give me cards, and say, no, I don't like the cards, I'm not betting. You have to bet $20, and then you could get a crap hand, and the dealer could get like 18, right? But in trading, you can actually do the exact opposite. You can be your own casino and wait for those, that 20 or 21 to come up and then place your money. You understand? It's the exact same thing as poker. We'll get into this later, but understand, if you go sit at a poker table and you get pocket aces pre-flop, you have the very best hand in the game if you're playing poker pre-flop. Aces. Nothing else can beat it, right? But as soon as those cards come out, you might have the worst hand. Now, you could have the best hand for the pre-flop, after the flop, after the turn. You could have the very best hand at, say, a 95% win rate going into that final card, but that still doesn't mean that you might win, right? There's that 5% chance that you're going to lose. You're going to hit that card that's going to be a loser for you, and it's going to be a winner for the other player. But under the odds, and you understand, like, hey, I have a 95% chance of winning this trade or winning this hand, you're going to take that bet every single time, right? But understand, there is that probability of you actually getting stopped out, or sorry, not stopped out, of you losing that hand. So what were we even talking about? Risk to reward. Okay, we kind of got off topic there. But talking about risk to reward, if you're going to go from 1-to-1, you should be, say 70%. That's very good. 70% of your trades, you're going to be banging out 1-to-1 trades. That's very good, right? Now, if you want to say, okay, I want to be making more than my losers, so let's say 2-to-1. Okay, that means you need the market to go more in your favor, basically double the favor of what you asked before. So what do you think is going to happen to that win-loss ratio? It's a give and pull effect between your winning percentage and your risk to reward. If you want more from the market, you're going to have a smaller win-loss percentage. Does that make sense? So if you're going to be banging out 1-to-1s, banging out 70% winners, okay, now you want to move to 2-to-1. Well, the chances of you going up in percentage for winning is nearly impossible, because you need prices to go more in your favor. Does that make sense? So now you're not just asking for, say, 10 pips, you're asking for 20 pips from the market. So your win-loss ratio might go down from 70% to 60%, right? So you're going to have to give that 60% up, or sorry, that 10% up, to make that extra 2-to-1. And it's the same thing. If you want to make 3-to-1 or 5-to-1, the odds of you going 5-to-1 with a 70% win-loss ratio is extremely low. You're probably going to be banging out maybe 30% or 25% trades. So this is something I like to talk about when understanding what type of trader you should be, and should you be banging out 1-to-1, 2-to-1s, or 3-to-1s, or 5-to-1s, or 10-to-1s. Now, for me, it depends on your background. Now, for me, I like sports. Okay. Growing up, I've been on some really crappy teams, and I've been on some really good teams. Most of my life, I've been on some really good teams. And same thing when I was like gaming. I was on a very good gaming team. We won a large part of our games. Most of our games we were winning about 85%. Sports, I've been on some teams that we would lose every single game, and I've been on some teams that we win every single game. And I can tell you, winning feels a lot better than losing. So for me personally, with my history of sports and competitive gaming, or whatever you want to say, I have a history of being a winner, right? So for me to go into trading and then be a 20% trader, or a 40% trader, or a 30% trader, is highly unlikely, because I can't handle it mentally. Now, if you can handle it, that's totally fine. You could be a 20, 30%, 40% winner, but be banging out 6 to 1, 7 to 1, 8 to 1s. Now, for me, I lose track after I start getting upset after 2, 3, 4 losses. About 4 losses, I start getting a little upset, right? So I need to dial back on my win percentage and I'll say, okay, I'm happy with my 2 to 1, 3 to 1, and then I'm out, right? I made 2x or 3x, I'm out. I'm out of the market. I'm going to have my 50%, 60% winners. That's something I like. Maybe you want to be an 80% winner and just bang out 1 to 1s. You don't like losing, so you don't want to be losing often, but you want to be winning often. So you don't mind grinding out 1 and 1s, 1 to 1s, 1 to 1s, 1 to 1s. But just understand that you need to create, your risk to reward to your style of trading. And can you handle losing 3 to 5x trades in a row, potentially 10x trades in a row without you deviating from your trading plan, right? So maybe understanding, okay, do you mind losing 5 trades in a row? If you don't mind, then okay, then maybe looking at, 6, 7, 8 to 1s is totally fine for you. But if you're someone like me, I don't like winning 20% of my trades. I don't like winning 30% of my trades. I want to be at least a 50% winner with making more on my risk. So maybe a 2 to 1 or 3 to 1. Right? But just understand you're not going to be banging out 10 to 1 trades with an 80% winning strategy. Sorry, but I don't know any traders. I'm sure they are out there, but I just don't talk to 10 to 1 traders that have an 80% win-loss ratio. I would love to talk to them, but I just personally don't know them. Most people I know bang out 2, 3 to 1s, 5 to 1s, right? So just understand what type of trader you are. Can you handle those winners? Can you handle those losers? Just understand, what do you like? Risk to reward. And the main thing I want you to understand is, if you want more of your reward, your win-loss ratio is going to go down. You need more of the market to go in your favor for you to actually make money. So there's a chance for a pullback and stop you out, right? It's a lot easier to bang out 1 to 1 trades instead of banging out 3 to 1 trades. What does price have to do? It has to clear 1 to 1 first before it gets to 3 to 1. It has to clear 2 to 1 before to get to 3 to 1. Right? So there's a chance it might go 1 to 1 and come back and stop you out. There's a chance it might go 2 to 1 and come back and stop you out. Right? But you understand you're going to have a smaller win-loss ratio, but you're okay with that. You're going to be making more on your risk rewards. Okay? Okay, I hope that made sense. I think I did a really good job explaining that. I can't sit here and tell you do 3 to 1s, 4 to 1s, or what. If you're the type of trader that can't handle 4 to 1s, 5 to 1s, winning 4, winning 5 for every one you risk, then maybe you should look at 2 to 1s or 1 to 1s, right? It's just about finding that style that you like, okay? So the next thing I want to talk to you guys about is thinking in percentage, not pips. So let's go back to the chart. And now this is just going to be me basically talking this entire video. So if you want to do something else, by all means do something else. But my whole plan for this video is to like get clips of like Thailand or something like that, of walking street, and just play them in the background. I've done that for other videos, and I've noticed, for me personally, with all these chicks walking around in the background, it gets very distracting, and I'm watching half of it. I'm like, dude, I don't even know what the hell I'm saying. I'm not even listening to what I'm saying. I'm just looking at the video like, oh, that's a nice beer bar. All the girls in their bikinis. I'm like, oh wow. I'm like, oh shit, I'm supposed to be listening to what I'm trying to say. So I decided to scratch that. It's something I would like to do in the future. But for a video like this, I don't know. I think it's best to just sit in front of a chart. I could be doing this live, I guess, but it's 8 in the morning where I'm at right now. Let's see. What did we say? We were thinking in percentage, not pips, right? Okay. This is something I see a lot of the time, is when people post their trades and they're like, hey, look, I made 500 pips, or I made 1,300 pips over the course of this month. I just made a 100 pip win. So what a lot of new traders don't actually understand is, you could be negative pips but still be up money, or you could be up pips and still be down money. You need to be thinking in percentage, not pips. You could risk, say, 1%. Say you have a $10,000 bankroll, a $10,000 trading account. You go out risking 1% per trade, okay? And let's say one trade is 100 pips from your entry to your stop loss. You get stopped out, you are losing what? $100 because you're risking 1% of your capital. Okay. Now, if you go on to another trade, you risk 50 pips. Okay. From your entry to your stop loss, you've decided, okay, this is where I'm going to get in, this is where I'm going to get out. I am risking a total of 50 pips. If you lose that trade, you are going to be down a total of 2%, correct? You're going to lose another $100, so now you're down $200. So say the next trade, you're looking at taking a scalp. All right, you're getting in and out of the market at a 1-to-1. You're risking 1%. Your entry to your stop loss is 5 pips, right? So it's a lot smaller zone. One trade was 100, one trade was 50, and now this trade is 5 pips. If you win that trade, you're risking 1%, so you're going to be making $100. Okay, so you could be down 145 pips, yet still be down only 1R, $100. Let's say it was a 2-to-1. Okay, so say you risk 5 pips to make 10 pips. You're risking 1% of your account. Okay, if you win, you're only making 10 pips, but what's the dollar figure? What's the percentage? You're making 2R, so therefore you're making your money back from the other two trades. So now you're at break even. You've made $200 on that trade, and you previously lost $100 on each trade. But you only made 10 pips on that trade, but it's the percentage of what you risk, not the pips. You're still down, what, like 140 pips, yet you're up money. The same thing is true if, like, say you're doing a monthly time frame, right? You could have a monthly time frame, a big chart, and trade a zone that's 1,000 pips, and you could be risking 1%. You could be up 1,000 pips by the end of the month, and your entry to your stop loss originally was 1,000 pips, and say the next month it's up 1,000. Okay, you close, you're up $100, but then you go on the 1 hour time frame and decide to risk 2% on a trade, and you lose that. Now that entry to your loss, to your stop loss, was only 100 pips. So now you're down, you're still up actually like 900 pips, but you're down one risk to reward, 1R, right? So don't start thinking in pips. You need to think in percentage because you could be down in pips yet be up, or you could be up pips and be down in your trading account. So I want everybody to think in percentage, not pips. Whenever I hear people say I made 100 pips or made 500 pips, I really don't care. What I really want to know is, okay, how much did you risk? What's the percentage? How much percentage are you up? How much percentage are you down? Okay, pips lie, percentage don't. Okay, hopefully you understand what I was coming across there. So cool. So far we have gone through social media, we've talked about risk to reward, and we've talked about thinking in percentage, not pips. So now let's talk about trading like a casino, thinking and trading in probabilities. I think Mark Douglas wrote the book Trading in the Zone, and he says you should be thinking and trading in probabilities. All a probability is one thing happening over another. So say if you get XYZ, there is a 60% chance that this might happen. All right? And that's all you need in an edge. You just need a probability based edge in the market for you to actually to make money. It's the exact same thing as a casino. In blackjack, I think it's what, like 54% that the casino has an edge. So it's a very slim edge that they have, but they still make millions and millions of dollars off that game every single year, right? Why? Because they have a probability-based approach to the game of blackjack. They don't break the rules. They have the exact same rules for every single hand. The rules don't change per hand. Now, each time a card is dealt, that changes the outcome of a future hand being played. Now, that would be counting cards, which is not illegal, but casinos don't like it when gamblers start counting cards because they lose their edge. Because once a certain card is taken out, well, now there's a probability that another card will arise, right? So the more high cards in a blackjack deck is the higher probability goes into the gamblers, right? So I don't want to get too much into that because that will go over most people's head, but we need to be thinking in the same way when it comes down into our trading. We need to have when XYZ happens, there is a 60% or there's a higher probability of this happening. Okay, and if we understand, okay, we're going to be making, say, a 1-to-1 risk to reward, and we get XYZ lined up, there is a 65% of the time that I am going to be right. We're not just sitting out here gambling thinking, okay, price is going to go up because it's here. All right, we need to have step one, step two, step three, or whatever lined up. That's how you see most traders. When you talk about, hey, why did you enter that trade? Oh, I entered it because it's sitting here at this level, and I saw evidence of buyers coming in on my DOM, my level 2 screen. I saw big institutions buying. I saw this price rejecting here. So that was telling me that one thing, a probability-based approach, that one thing was going to happen over another. So they pushed buy and price went up, right? They understand that prices might go down, but they understand 65% of the time it's going to go up if they line up XYZ. So that's exactly what you need to be doing in your own trading. I, for one, trade supply and demand. You might be trading support and resistance, I don't know, stocks, whatever strategy you trade, it doesn't matter. You just need to make sure you have a systematic approach and understand that, okay, if I get XYZ, AG, FG, AG all lined up, there is a 70% chance of me hitting a winner here. Yes, I might lose 5 trades, 10 trades in a row, but I understand that I will let the probabilities play out. Okay? You ever go to a roulette wheel and they usually show the last 10 or 20 hands or the last 10 or 20 spins, and it usually goes like black, red, 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 black, black, red, 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 black, red. You understand? There's sometimes where I've gone to a casino where it's been 30 times red in a row. And you know what people are doing? They're pounding the opposite side of the color. Statistically, it's about a 45% chance that it's either going to land on red or black, but it's hit it red every single time, 30 times in a row. The odds of that happening, I don't even know what the odds of that happening. But I know that there was 30 people surrounded around that blackjack table moaning and groaning every time they spun that wheel and it landed up on red. So we need to understand, yes, we could have a probability-based edge in our market, trading like a casino, but we might get 5, 6, 7 trades losing in a row, 3 trades losing in a row, 10 trades losing in a row. So what I did here is we are sitting here at random.org coins. So what this is going to do, it's going to flip a random coin how many times we want. And let's just say we got to select a coin. Hold on. I have no idea. I want to make sure everybody knows what a certain coin is so we can agree on heads or tails. I think I did dime on the last one. So let's say we did 20 trades in a row. Sorry, 20 flips of a dime, heads or tails. Okay, and let's say we are going to be, this is a 50 chance of heads or tails, and let's say we are trading risk to reward 2-to-1. So each time we win, we're making, say, $100, or say every time we win, we make $200, and every time we lose $100. So we have a 2-to-1 risk to reward. We understand by flipping a heads or tail dime, it's going to be a 50% win-loss ratio. The interesting thing is, let's flip the coins, is what is the order? Is it going to become heads, 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 tails, 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 heads, tails, heads, tails, heads, tail? So let's see. So this example, we flipped 20 coins, heads or tails. So we got heads, that's plus 200. We lost, now we're at break even. We lost. Okay? We have a 50% win-loss ratio. But each time, if we win, we're making $200, and if we lose $100. In a casino, any gambling man would love to have these odds. Okay? But the hard part in trading is actually, this goes into your psychology, is if you lose 4 trades in a row, are you going to have the same mindset as if you had on your first spin or the first flip of the dime? Because chances are when you're on this coin right here, there was it 1, 2, 3, 4, 5, and you just came off of 3 losing trades in a row, your mindset is not going to be the same as if it was over here. So now you decide, okay, I'm switching up the strategy or whatever. That's usually what happens is people, after 4 or 5 trades in a row, they get upset, they look to quit. It's the exact same thing in my group too. People get upset. Even I get upset. If I lose 5 trades in a row, 4 trades in a row, hell yeah, I put a lot of pressure on myself, right? I don't like to lose 4 trades in a row, especially for someone like me that came for most of my life more on the winning side when it comes to like gambling or sports or anything. I won, right? So for me to lose 3, 4 in a row, that hurts me. So my mindset is not the exact same as if I was over here. Can you actually reverse that? Oh, okay. I'm just reading what it says. Um, so then what happened? We won. So let's see. Hold on. We lost. We're down 100. We're up 100. Sorry, we won. I'm getting this mixed up. So heads is our winner. Uh, we won. We're up 200. Lost, loss. We're break even. Lost, loss. We're down. We're down 200. We win. We're now at break even. We're up. We're up 200. Lost, loss. We're break even. So as of this point, as of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, say 9 trades, and we're busting out 2-to-1 risk to reward with a 50% win-loss ratio, we still haven't even made money, right? On paper, you're gonna think, okay, I could totally do that. That's fine. But say it takes you a month to get those 9 trades, and then you're at break even. You're putting pressure on yourself going to the last couple of days of the month to make money, right? So, you know, with a 2-to-1 risk to reward, with a 50% win-loss ratio, there's a chance that you might be break even after 10 trades in a row, or however many. You could be down money, even though you're at a 50-50 win-loss ratio and you're banging out 2-to-1s, you could still be down money. But then all of a sudden, at this point, say before you get into this next trade, you're like, hey, I'm switching up the strategy, or hey, I'm changing to a different strategy. That's what most people do. They change when they're at this area right here. But I definitely, your mind's probably racing now because now you just got off a losing streak. You won, you're like, hell yeah. And then you win again, you're like, hell yeah, I'm back. And then you lose 2 in a row, and then you look back, you're break even after 10 trades. You're going to be upset. I would be upset. 10 trades, you're break even still. So the second you quit, you start changing your strategies, starting to do other things. What happens? This would have been a winner. This would have been a winner. You would have lost this one, win, win, loss, win, win. This is where you got paid, baby. The remaining, what is that? 5, 1, 2, 3, 4, 5, 6. So the remaining 9 trades right here, you would have made some serious money. But before you actually got to that next trade, is you changed your whole strategy. So this is why I like to say is you need to have, at least 20 to 40 trades to back to say, okay, am I actually making money or not? If no, okay, I might want to change something. Because if you're rocking a 50% win-loss ratio and you're banging out 2-to-1s, and after say 20, 40 trades, it's not acting up, well then probably something has to change in your trading strategy. Hopefully you guys can hear me clear. So if we were to trade this whole thing, we would be up 200, down 200. Okay, we were break even at this point. So let me just restart. Sorry guys, I lose track. I want to make sure I get this right for you guys. We're up 200, break even, down 200, break even, up 200, break even, up 400, up 300, up 200, up 400, up 600, up 500, 5, 6, 7, 8, 9. So right up to here, we're up 900. Then we lose 2 in a row. So then we would be what? 7? After 20 trades, we're up $700. That's great. If you look at it, the big picture, I would say, oh, well, that's great. The hard part is actually going through each of these trades and dealing with the emotions of each trade. Because I could show you this report and I could say, okay, I made $700 at the end of the month. And you'd be like, great, that's awesome. But what you don't know is the struggles that I went through in here, and here, and here, and here, and here, right? But then, man, I was on cloud nine after that, right? Here was another simulation that I did, exact same basically. Win, win, loss, 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 win. I'm feeling pretty good now. Win, 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 win. I'm feeling like I'm on cloud nine, baby. I'm up what? 2, 4, break even, down 100, What is that? Plus 100, 300, 5, 6, 7, 8, 9. So boom, after my first 10 trades, I'm up 900 bucks. I go down to 800. I'm up 1,000. I'm up $1,200. I'm feeling really good. And then all of a sudden I lose, 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 win, lose, lose. So I'm still up around maybe $700, $600 after my 20 trades. But the hard part is actually dealing with those losses in between each trade and each win. You notice how they come in streaks? Now, this should be heads, tails, heads, tails, heads, tails, heads, tails, heads, tails, right? You think about it, it's a 50-50 chance. Is that even true? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this worked out perfectly. 10 tails, 10 heads, right? But we have the 2-to-1 risk to reward that we made money. But the hard part is actually going on these win streaks and these lose streaks. You understand? So that's what I want to talk to you guys about. Talking about trading like a casino, understanding just probabilities, and that kind of goes back into our risk to reward and our win loss ratio. Just understand, we could have a 2-to-1 risk to reward with a 50-50 win loss ratio. You would love that. I'm sure you would love it. But the hard part is actually dealing with these losses and with these winners, right? When you get these streaks. Because if you started here on your trading plan, you would have lost, 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 lost. You win, and then lost, lost. You would probably be private messaging me, freaking out, saying you're down money and this isn't working. But as soon as you quit, boom, you get on these big winning streaks. Understand? So that's kind of, let's go back to the charts. That was a bit longer than I expected. This is going to be a long video though. Hopefully it goes faster later on. Let's see, trading like a casino, thinking in probabilities, blackjack slash poker, heads or tails. That's it. We covered everything on trading like a casino. So that's what I recommend you to put in your trading, is trading like a casino, thinking and trading in probabilities, okay? Your next question might be is, okay, I want to trade like a casino, but how do I do that? Okay, so this is when your trading plan comes in handy, because your trading plan is your edge. Now, I don't know a single consistently profitable trader that does not have a trading plan. I don't know any. Every trader that I know has a setup that they like. They become a one-trick pony. They have a trading plan that they could show me and say, this is my trading plan, this is my setup. I buy because this happens, this happens, this happens, this happens. And I understand I have a 65 or an 80% or 40% chance of this happening. They have a trading plan about why they're entering the trade, how to manage the trade, how to manage the win streaks, the lose streaks, and all that. So your trading plan is going to be your edge in the market. And I'm going to talk about what you should probably have in your trading plan, because I can't sit here and answer that question for you, because we may be trading different strategies. Um, you know, we're going to have different personalities. We're going to have different strengths and weaknesses. So yours is going to be different. That's the thing about trading plans. No trading plan is exactly the same. I don't know a single trader that trades a certain methodology exactly the same. We all kind of have a different viewpoint on the market. If you go into a casino, we're going back to the casino, baby. You guys, you can tell I love the casino. If you look at, say, the roulette wheel or blackjack, they have a set of rules of what each value of a card is, or what the payout is, or how to play the game. That is their trading plan. That is their betting plan, I guess you could say. That is their edge in the market. Because if they didn't have a certain rule in there, then the odds could be switched into your favor and not the casino's favor. So with those rules, they have the edge. So we need to be trading like a casino as well. So that means we need to have a trading plan. See how this is all starting to come together, guys? So a couple things that could be in your trading plan is goals and motivations about why you're actually doing this. Maybe you want to be trading part-time, maybe you want to go full-time, maybe you just want a second stream of income, maybe you want to spend more time with the family, maybe you want to travel. Everybody has their different, goals and motivation to why they're actually trading. So have your goals and about why you're trading as your number one. I think it's important to look back and say, okay, why am I actually trading? The second thing is trading to your strengths and weaknesses and understanding your beliefs in the market. Maybe you counter trend really poorly and you're really good at trend trading or range trading. Or maybe there's just a belief that you have in the market that you could use as a strength and you want to be trading that strength more than your weaknesses. So maybe if you're not good at holding your trades for longer than 3 days, well then probably swing trading is not for you. So maybe you should look at scalping, right? Trade to your strengths and weaknesses. I can't answer that question for you. So you have to answer that for yourself. That might take time in the market. That might take a month, could take 2 months. But having a trading plan, you can add to these strengths and weaknesses. You might say, okay, I'm really good at this setup because I see the market in a certain way, or I really like it when this happens, or it really goes to my beliefs or my strengths, or it doesn't affect my weaknesses, right? But maybe you're really bad at counter trend trader, or maybe you don't like, trading the Canadian currency or a certain stock. So you have to answer that question for yourself about what your strengths and weaknesses are and what your beliefs are in the market. The market doesn't care about what your beliefs are, but you need to be aware of them. So have your little set of rules according to your strengths and weaknesses. Don't play to your weaknesses. Trade to your strengths. Make sense? Uh, Another thing you need to have in this is this is kind of going by points, so it's sections. You could have a section on goals and motivation, a section on personal strengths and weaknesses and your beliefs. A next one would be routine and habits. Okay, so maybe you're the type of trader that cannot trade 4 hours a day. So maybe swing trading is right for you. Maybe you don't have the time to sit in your computer in the morning, so swing trading might be for you. Maybe you don't like holding your trades for longer than 3 days, so maybe scalping or day trading is for you. Maybe you don't have the time to sit in the markets when it's open. Maybe you're at work. Maybe you're at the gym. Okay, but what you need to have is you need to have a set routine to what time you're looking into markets and what your trading plan and strategy is. So that's a section that I would recommend filling out is, okay, what time am I looking at the markets? Am I looking at it once a day? So I might be looking at longer term position trading or swing trading, or I can handle looking at the screen for longer than 3-4 hours. So maybe I want to look at day trading or scalping. Okay. But what you need to have is a set routine. Okay, I look at the markets at this time. I have 3 hours to trade at this time. Okay, I can't trade. So maybe swing trading. But you have a certain routine. Maybe you set your alerts when you're at work. Maybe you can take trades when you're at work. Everybody has a different lifestyle. So what you need to do is, trading is a lifestyle, but you need to adapt trading into your current lifestyle in some way. Okay? The next section I want to talk about is the system. This is where your edges in the market, right? XYZ happens, um, you know, one thing happening over another, probability, this happens, right? So you have your trade set up. Okay, when prices are inside my higher time frame zone, I have support and resistance lined up. I see evidence on my RSI turning. I don't know. This is however your trading strategy is. But what you need to have is a step-by-step approach to say, okay, what's your rules? What's your system? This isn't my system or Bilbo Baggins 91 system. This is your system. You're trading to your strengths, to your weaknesses, to your rules, to your routine, to your setup. Okay? See how everything's coming together? I can't answer that question for you. Maybe you trade different from me, maybe you don't. But what you need to have is a set of rules that you consistently follow and that you have pictures that you can fall back on to say, okay, how am I going to manage the trade? And I think that's something I talk about. Oh, okay, I don't. Oh, yeah, I do. Um, review. Review and evaluation. Okay, so after every 20 to 30 trades, I go back and I review to say, okay, what's happening in the market right now? How could I do better? Am I taking good trades or bad trades? And honestly, I do this every day. Once I take a trade, I journal it, I take a picture of it, I say, why did I buy? Why did I sell? I bought because this. Why did I sell? I sold because I had this. How did I manage the trade? Did I manage it well? Did I let my emotions get the best of me? And all that. Okay? So that's what you need to have. I do that every single day. So I take a picture of it, I review it. I do that at the end of the week on Friday. I go through my trades for the week and I say, okay, what did I do? Was it a good trade? And then I do it at the end of every month as well. So I do it once on a daily basis, once on a weekly basis, once on a monthly basis, and then every 6 months I go back and look at my trades for the last 6 months and I do a 6 month review. Those are my favorite because after 6 months you will see, you know, certain things in your trading plan that are starting to change that you need to adjust. So every 6 months I'm adjusting something in my trading plan. I did mine 2 months ago now. I changed some stuff up. So, in 6 months from now, which is going to be in December, I'm going to go back and look at the previous 6 months and see what I can change to make my trading plan better. You never really just have a set trading plan and you trade it for the rest of your life. You're always trying to sharpen your edge in the market, okay? So you need to be taking pictures. You need to be journaling. You need to have some type of system, of a review system, a journaling system, taking trades. Once you take a trade, take a picture of it. Does that make sense? What's your review period? Okay. The last thing on your trading plan you should be having is rules to your trade management system. This is a common thing that I get a lot of questions about. Is people ask me, well, how do I manage my trade? And this is a question that a lot of people message me saying, talk about trade management. And honestly, this is something that I talked about at the beginning of this video when I talked about social media. You can ask 5 different people how you can manage a trade. They're all going to say something a little bit different. But what you need to do is trade to your strengths and weaknesses. Do you like taking multiple take profits? Or are you the type of trader that just wants to get in and out at 2 to 1 or 3 to 1? Or do you want to be the trader that holds their trades for 10 to 1s or whatever? How are you going to manage your position? This is a common one. Well, how do you manage your stop loss? Well, I don't know. It's however you want. Are you going to be the type of trader that gets out at 2 to 1, 3 to 1, or are you going to be the type of trader that gets off at half off at 2 to 1 or 3 to 1 and then let the other half go? Well, then how are you going to manage that half? Are you going to follow the swing highs? The pivot points? Are you going to follow the pivot points and just hold it as long as you can until prices pull back into that pivot point and stops you out? Are you going to move it up every 20, 30 pips? So then you have a 20 pip buffer. So then every 20 pips you would move it up 20 pips. There's so many different ways. Are you going to take profit at 1 to 1 or 2 to 1? Are you going to let the second position run? How are you going to manage that position? Where are you going to take profits? I can't answer that question for you. That's usually where people get upset. They're like, well, you didn't really answer my question. Well, I can't really answer your question. I can tell you how I personally do it and that, but when it comes to trade management, after you say you get out at 2 to 1, there's pros and cons to everything, guys. That's what you need to understand. If you get out at 2 to 1 and then prices hit your target and then go back and, hit a 30 to 1, but you got out at 2 to 1, you're feeling like a complete idiot, right? Sure, I do that all the time. I get out at like a 2 to 1 or a 3 to 1, and then prices continue to go on for like 30 to 50 to 1 R&R. So if I just held my position, maybe swing lows or swing highs or whatever, I might have captured that 20 to 1 or 50 to 1 or whatever. But that's the risk I'm willing to take because it's where I feel comfortable with my emotions and where I want to take profit. I get upset if I start losing 4 or 5 trades in a row. I get upset if I see my first target hit at say 1 to 1 and then I move my stop to break even and the price comes back and stops me out. Once that happens 5 trades in a row, I get upset and then I do the exact opposite. I get out at 1 to 1 and then that one time prices just take off to my 30 to 1. But what you need to have in your trading plan is just something that you accept and that you're willing to go through for 10 to at least 20 trades. That's what I say. Try something out for 10 to 20 trades, adjust, and if it's still not working, adjust something else, right? Most of the time, it's not the trading strategy, it's you, the trader, and you screwing up your plan. So if you talk to me saying, okay, I'm going to take half off, half my take profit at 2 to 1. You take half off at 2 to 1 and you move the second position to break even. Let's say it's moving to 2 to 1, coming back, stopping you out, you know, um, so you're only getting half your position off, then your position's coming back to stop you out for a break even on the second position, on the remaining half. If that happens 5 times in a row and you get a couple full stop outs, you're gonna get upset, right? You're gonna say, screw it, I'm taking 2 to 1s now. And you've only been trading for like 7 trades. You really haven't let time for that strategy to play out. You need at least 10 to 20 trades. Honestly, 20 trades is like the bare minimum. Okay? So give it 20 trades. If you don't like it, then change it. But you can't sit here and trade differently after every 9 trades. Like we talked about over here with the coin flipper. We had heads, tails, 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 heads, heads, tails, tails. We were break even at this point. At this point, 10 trades in, you might be thinking, screw this, I'm changing something. Well, then the remaining of the 10 coin flips is irrelevant because you changed everything. Same thing over here. Maybe you started on like a massive winning streak, and then you just lost, won, lost. You're feeling like a complete idiot, right? So hopefully this is starting to make sense, guys. I have no idea. Let me know in the comments below if this is good or not. I think I'm knocking it out of the park, to be honest. Usually when I go on rants like this, I feel pretty confident in my ability. So I can't answer that question, but what you need to have is rules to your trading plan about why you're entering a trade and how you're going to actually manage that trade based on your strengths and weakness. Can you emotionally handle prices going up 30 to 1, right? Or are you going to get out at take profit at 15 to 1 and make an emotional decision and then see prices continue to push up to 30 to 1 where your original take profit was? To me, I get freaked out. I can't do it. Maybe I will in a year from now, 3 years from now. Maybe not. But for me personally, I can't do it, so I don't do that. I like my 2 to 1, 3 to 1s. But nothing's stopping you from taking multiple take profits. Wow, this is long. Trade management. Okay, so we discovered trading plan and trade management. The next thing I want to talk to you guys about is backtesting and confidence building and how it will build trust in your system. An analogy I like to give is, say you and your friends go to a haunted house. You're too scared to enter that haunted house. You're scared of ghosts or whatever. You don't want to go in. So what you do is you sit outside of the house and you wait for them to come out. 10 minutes go by and your friends come running out of the haunted house screaming, saying, run, 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 we saw a ghost. You get back to the house and then they're saying, yeah, we saw a ghost. And let's say they actually saw a ghost, a flying ghost. You can see right through the ghost. I don't know. They saw a ghost. Their belief system is going to be different from yours because to you, you might say, damn, there is an actual ghost in there. Every time you go by that house now, you're thinking, oh, there's a ghost in there. Oh, I heard there's a ghost. Compare it to the people that were actually in there and actually saw the ghost. They have a full-on belief that they saw and witnessed a ghost, right? Compare it to the person that you sat outside of the house. You're just saying, yeah, there's a ghost in there because my buddies ran in there and then they came running out saying there was a ghost. To you, you don't know for sure if there's a ghost. So you don't have full confidence and full belief in that system that there is an actual ghost in there. But to them, and they 100% saw a ghost, they're going to have a different belief system and they know for a fact that there is a ghost in there. But you don't know for sure. And this is something that takes time to actually develop in your own trading because so the exact same thing is true in trading. When people join our private group at Moneyball Trading, they join the group with motivation to learn trading and all that. But what they don't have is trust and confidence in the methodology. They're brand new into it. They got to learn the different lingo, how to draw zones, how to read the price action, how to do all this. There's a lot to learn, right? So they're motivated. That's what's going to keep them going. But what they don't have is they don't have full trust and confidence in the system. Why? Is because they haven't seen the same setup work 100 times. It takes time and experience to see a certain setup work over time. If you stare at a chart for, years and years, you start to see patterns happen. And patterns, that takes time and experience to actually learn. So the exact same thing is true in trading. So that's what backtesting comes in handy. Now what backtesting will do is it will allow you to trade a set of rules of previous market conditions and to tell you, okay, this system is profitable, this trade setup is profitable when I do this. So then when you go into the live markets, you trade the exact same rules, the exact same setup, and you understand over the last 100 trades, you are a 70% winner with a 2 to 1 risk to reward, right? But then you go into the markets and you start losing. So say you start losing, going back to this coin flipper. You lose, 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 lose. You start freaking out, right? But what that will do in your back testing is it shouldn't hurt you in your trading because you understand, okay, I have 100 trades I can at least back my confidence on and to say, okay, this actually works. I have 100 trades. I have pictures to prove it. I just need to focus on my next trade. Go trade to trade. Don't think of 10 trades or 20 trades or what happened in the past. Each trade needs to be independent. Okay? So when you're back testing, say 100 trades, 20 trades or whatever, you can see that there is, you have an edge in the market of one thing happening over another. You have a 70% win-loss ratio with a 2-to-1. You're going to have a different confidence than if somebody starts joining or joins the private group or starts trading and they just go off gung-ho and they have no plan and they're brand new into the methodology because they don't have trust in it. They haven't seen the setup work for themselves. When I trade and I lose 4 or 5 trades in a row, I do get upset. It's like, oh shit, come on, guys. Like, or, come on, me, right? That sounds a little gay. Come on, me. Oh, come on, guys. Come on, me. But it's a little joke. Let me know if you guys got that joke in the comments. Not everybody will listen to this full video, but there's a joke for you guys. But basically, what I was saying, man, is the backtesting, it will build confidence and trust in your system, and you will start to believe in the methodology. So if you don't decide to backtest, it might take you 2-3 months to get those trades under your belt. But if you can backtest a couple years, within a week, you can do backtesting 100 trades. It'll take you a week or a month to actually backtest 100 trades. Or it could take you, 6 months to actually get those trades. So it's a lot quicker to actually just do the back testing and adjust from there than actually just go into your trading blindly and start trading the rules that they give you. Luckily for our group, we do a back testing meeting every single month. Once a month, we go over the methodology only for like 5-10 trades, but what we like to do there is just show our top-down analysis and our thought process. So hopefully you understand that. This is getting a bit long, so I want to wrap it up sooner rather than later. Okay, so we talked about backtesting and how it builds confidence, right? If you start seeing the setup happen again and again and again and again, you start to build confidence in that setup, right? Makes sense? Now, the next thing I want to talk to you about is, I guess I already talked about it, was kind of dealing with win streaks and losing streaks, but this is when your confidence can get really high or your confidence can get really low. Because let's say, for example, if we go back to this coin flipper, you lose 1, 2, 3, 4 in a row. Your confidence is not going to be the same as if you just came off this time period where you won 1, lost 1, 1, right? You're going to feel pretty shitty with yourself. I got to stop swearing. I'm screwing up my algos. But yeah, it's all good. You guys don't mind, and I don't mind. I enjoy it. But your mindset's not going to be the same after this trade going into that next trade like we talked about before, right? And then same thing is over here. If you win, win, lose, win, win, you're going to feel pretty confident going into this next trade. Not like over here where you're not going to feel confident. So as of this month, I went, I think 10-0. 10-0 with my trading. I'm shooting on cloud 9, baby. I'm riding cloud 9, feeling pretty good. But I can't let that confidence get the best of me. That's when I start making bad decisions in my trading and I start making trading mistakes. I start slipping on the quality. I start looking for more trades and I need to focus on the quality of the setups. So a couple things that you could do is, if we talk about losing streaks, is you need to manage your emotions. So say after 3 losing trades in a row, what do? I start halving my risk. So say if I risk 1% every trade, after 3 losers in a row, what I'll do is I will just half my risk. So I'll start risking 0.5%. So if I continue to lose 2-3 trades more or 5 trades more, I'm risking half than I was before. So that's okay. Now, if I lose another 2 or another 3 in a row, I'll stop trading for the week or I'll take a week off because clearly my mindset is not there. I need to come back with a fresh mindset, ready to take the next quality trade setup. But like we talked about before, my mindset's not going to be the same if I've just lost 4 or 5 trades in a row. So something that I personally look to do is, in basketball and sports, this is something I like to always fall back on, is sports analogies and stuff like that, is if a what is it, basketball shooter? Yeah, a basketball player um, is having a really bad game, misses 5 threes in a row or 5 jumpers in a row or whatever, 5 free throws, their confidence is really low. So what they need to do is they call it a layup, right? They just want that easy bucket. It gets the confidence back in them. They get themselves on the board again. So what do? They just go up to the rim and throw a layup in. They get those 2 points. They get that stat. They start feeling the confidence. You see Stephen Curry when he's draining threes nonstop, he's feeling hot. You continue to see him throwing threes because he's got the confidence and he's riding hot. So people keep feeding him the ball. If you're missing every shot, your teammates are not going to be feeding you the ball. They want you to get a layup so you can take that easy bucket, right? So what I do is if I'm losing three in a row, I just I half my risk. If I lose another two or three, I'll take the rest of the week off, or I'll take a week off. I might take a day off after three in a row. It really just depends. But what you need to have is at least some trade management or psychology management, you might call it, right? So that answers that. Let's see, last thing. So this is the last thing I want to talk to you guys about, and it's a common thing out there, is how do you grow your trading account? Say you have a small account. What do you do? What do you recommend? Well, a lot of people recommend trading that account, going high risk. Sure, you could do that. You could, start risking 5% or 10% per trade, but understand there is a chance that you will lose it, and it is high risk trading. Now, if you're really trying to grow it, yeah, maybe 5%, 3%. If you're on the more conservative side, maybe 1%, half a percent. But I wouldn't recommend trading more than 5%, right? Then you're just starting to over leverage yourself. I think the last thing you want to be doing is a gap happening in your trading and you end up owing your broker like $20,000, right? It does happen. So how do I actually recommend people to grow their trading account? Funny thing is, when I have people join my private group, I usually talk to them one on one during the first week. And most of the, say, older people that I talk to, say age 40, 50, or 60 or whatever, so the common thing that they say is they talk about time. I wish I started this earlier. I wish I started this when I was your age. And then what young people say when I talk to them, say ages 18, 20, young 30s, is I wish I had trading capital. I'm learning trading, but I don't have the capital to trade, and that's what's holding them back. So it always seems to be like a time and money thing, depending on what situation you are in. So what I recommend to young people is to actually get a job. I don't recommend trading high risk trading 10%, 20% per trade. What I recommend is cutting your expenses, living at home for a year, getting a job, and jam every cent of that paycheck into your trading account. There is a guy that in our group that just got his university degree as an electrical engineer. I told him, okay, if you only have, say, $1,000, $5,000 to your trading account, I recommend getting a job with that high-paying degree and get a good job. Say you make $60,000, $80,000 a year, put as much money as you can. You should be putting 99% of that money into your trading account. It will only take you 1 year, maximum two, to get where you want with that trading account. It's the exact same thing if you're making $20 an hour. If you're making $30,000, $40,000 a year, live off of rice. Move back home. Cut your expenses. There's no need to be going out drinking with your buddies all the time or spending stupid amounts of money. You should be saving for your trading account. That's what I tell people. That's what I did, right? Get a job, you just save that money. You don't spend it stupidly. So that's what I recommend to actually grow your trading account, is actually to get a job and inject as much capital as you can into that account and just continue to do it. If you're making 50,000 a year and you live off of half of that paycheck, throw in half your paycheck as much as you can after every single month. That's what I recommend. As for the older people, well, they already have the money. They just want the time back. They wish they started earlier, right? But that's how I would grow your account. Your trading account, it's more so for younger people, is get a job and inject all the capital that you make from that job into your trading account. That is what I recommend. Or you could do is go the high risk trading route. You could get the job and do high risk trading. That's totally fine. And I guess you would be risking maybe say 3 to 5%, and it will compound after 1 year. That's going to compound to a lot of money. So just understand there's a chance that you will lose it, right? So that's why I don't do 5%. I don't do 5% at all. Okay, that's basically everything I had on that sheet. Just a quick recap of what we covered. We talked about social media, risk to reward, thinking in percentage, not pips, trading like a casino, trading plan, how to create a trading plan, talked about trade management, back testing, dealing with winning streaks, losing streaks, and then how to grow your account. We covered a lot, and honestly, I could keep going on to each subject, each topic for about 20-30 minutes. I would love to, but I really don't want to make my account talking about, or my YouTube account talking about psychology all the time. There's a funny joke going around in the industry that it's, if you're a psychologist, you're just hiding from your own problems. You just like to hear other people's problems. Could be true. I don't know. I think it's kind of funny to think about it like that. If you're a psychologist, you just like to hear other people's problems and you're hiding from your own problems. It could be. I don't know. I wouldn't doubt it. But that's it. That's all I want to talk to you guys for this video. I know this was on the longer side. If you made it through, I appreciate it. Or maybe you just clicked through one random part. I appreciate everybody being here. I'm just going to end it like that. If you did want to sign up for the free little mini course that I do offer, you can do it at moneyballtrading.com. I would love to have you. If you do have any questions about trading or anything, you can email me at austin@moneyballtrading.com or Twitter, IG, Facebook. That will all be in the description. I'm going to put timestamps for people. So if they ever want to come back into this video, they can say, okay, what did he say? Remember, this is just my opinion. I really tried to give it to you guys straight. I did put a little effort into this video. I was just kind of shooting from the hip, to be honest. This is all done in one recording. So thank you so much. I appreciate everybody being here. Have a good time, and I hope this helped. All right, cheers. All right, it's me. I'm back. I'm just bringing you this quick, maybe 2 minute extra recording. There was, as I'm editing this video, I was kind of like, oh, I maybe should have touched up on this for like a quick 30 seconds. So there's about 5 points I just quickly want to touch about for those that did happen to watch this entire video. This is for you because I really want to make sure this is a proper video, and I put in 100%. Um, let's talk about this is a good one. Weekly goals or daily goals or monthly goals. That's people ask me. They say, "Hey, should I be shooting for say 5% a week, 5% a day, or 20% a month, or whatever? What should be my daily goal or my weekly goal?" And to that, I don't think you should have a daily goal or a weekly goal. I think monthly goals are totally fine, but when you start putting goals in 5%, what you want a week, if you haven't hit that target by the end of the week, you're going to start forcing trades and you're going to start taking bad trades. Same thing if you're doing it daily. If you want 1% a day and you haven't hit that 1%, you're going to start forcing trades, and that's going to equal bad trades, and that's going to put you into more of a losing streak or force you to take a trade that you should not be taking. I think monthly goals, I think that's reasonable. Have a monthly target. I should be saying targets, not goals. Monthly targets are good, but not weekly or daily targets. Another thing too is maybe like 3 trades a day. I know some people say like, oh, I overtrade. Well, then maybe only give yourself 3 shots. You're allowed 3 trades a day. However they turn out, that's the maximum you're allowed doing. Okay? Don't put a minimum. The market's always going to be there the next day. Okay? So I wouldn't have daily targets or weekly targets just to avoid from you making bad trades late in the week or later in the day. Okay. Another thing I want to talk to you guys about was trading plan does not need to be 20 pages. Also printed out. Yeah. I know some traders that have their trading plan just 1 page, and I know some traders like me, it's like 20 pages, but half of them are like trade reviews and like pictures of my setups and rules to it. So I have like my rules attached to the picture explaining, hey, what's a supply zone? This is a supply zone. This is how you draw it. So a drawing takes up a large portion of the page. So I print that and then I take that everywhere. And what I recommend is you printing it off and then reading it every single day for the next 6 months just before you start trading. Pull it out, start reading, just so you get the rule stuck in your head. So you can list it off the top of your head without you actually thinking about it. Okay? Okay, another thing I want to talk about really quickly is journals. There is a couple free ones. I think MyFXBook is free for people. There is Excel, there's EdgeWalk, there's Google Documents. There's so many different journals you could do. You could write in a physical journal. I like writing mine down as well. So then I have an online journal and a physical one I write down just because I like putting pen to paper. So that's something that you could be doing. Just make sure that you are taking pictures and you could fall back on those pictures in 6 months from now. And you can look at the stats saying, hey, clearly I'm not profitable trading this pair or this stock. Like, hey, for some reason, I can't trade the Canadian currency very well. Maybe it's because I'm Canadian and I have a bias towards it, or maybe I'm always buying gold because I'm bullish gold or something like that. Um, Maybe you're just not profitable trading the Swiss currencies. You're like 0 for 20. So probably it's a smart idea to get rid of those certain currencies. And if you aren't keeping track of that, you won't ever figure that out. And then really it's just putting a dead beat on your account. Okay. Another thing is talking about emotional capital really quickly. If you're risking too much, you're gonna make an emotional decision. So find that holy grail number that you like maybe it's 50 bucks, 100 bucks, or whatever. Maybe it's 1% of your account, right? But usually it's a number. It's not a percentage, but it's a number that you attach to yourself saying, wow, I could buy that new car part for my car, or I could take my girlfriend out for dinner, or something like that, that you have an emotional attachment to a number that you just want, you know? It's like once you make your first $1,000, then it's like, what do you want? Well, now you want 5,000. You could do a lot with that 1,000, but once you hit that 1,000, you want 5,000. Once you hit 5,000, you want 10,000, right? It's the exact same thing for trading profits and what you can do with that money. So find that kind of emotional capital and don't go over it. Might be $100, might be 1% or whatever. Could be $1,000. We all have different emotional capital depending on how far that capital will get us in our life. Make sense? Another thing too, let's see, weekly goals, trading plan, journals, emotional capital. Oh, this is a good one. Don't get a girlfriend or don't get a boyfriend. Whatever one you want. I don't recommend it if this is to anybody that's young. I think you should be focused on your trading. You could worry about girls or boys, whatever, in the future once you're financially stable and then you are profitable in trading. I think that they take too much time away, especially if you're trying to learn a new skill like trading. It requires a lot of time sitting on your computer. So I think you play that dumb little game when you're thinking about getting into a relationship. You can't get her, you can't stop thinking about her. You keep texting her and all that, going on dates. That's time and money out of your trading. And if you want to, become consistently profitable as soon as possible, then those things are going to hold you back. They're going to be draining your wallets. So I recommend just stay in Signal, focus on what needs to be done, and worry about that later. Okay, that's it. Just want to keep it really short for you guys. Once again, thanks so much for watching. If you have any questions, let me know. Okay? Cheers. Bye bye.